Let's turn now to the broader equity markets. I'm pleased to say that joining us now, we have Shana Sissel. She is Banríon Capital Management CEO and founder. So let's talk about this equity market, because the S&P 500, it's up roughly 10% year to date. That is one of the best first quarters in several years. And Shana, you make the case that this is really earnings led.
Yeah, its fundamentals have really been driving stock performance, and that's what you want to see. We've had a long time where that hasn't been the case at all, that macro factors have been driving it, but we've had really strong earnings, and the market's starting to pick winners and losers, and based on earnings. So yes, its fundamentals are driving stock performance, and that is a good thing if you are a fundamental investor.
And Shana, it's interesting, I mean, because coming into the year, the bear case, or the more subdued, not quite bullish case, was that you were going to see earnings struggle a bit here, that, okay, 2023 was better than feared. How much can that really continue that momentum? What do you think actually has not only had earnings hold up, what about this macroeconomic environment has actually fueled them forward?
I think the reason people thought that earnings would not be as good is because rates were high. And there was this feeling that we would have some slowdown in the economy, and we haven't seen that. And so that has been reflected in how companies are performing.
And there you go. And like you said, that is creating winners and losers. We're going to get into specific names in just a bit, but at a sector level, what's the broad brushstroke sort of paint here about who's a winner in this environment where maybe rates aren't coming down as quickly as had been consensus?
Well, clearly technology. Technology has been a big winner. You've seen the semiconductor chips. You've seen a lot of technology stocks do very, very well. You've seen some positive movement in some of the industrial names as well. There hasn't been a sector that I would consider like a big time loser, except maybe utilities or anything that's dividend driven. When you have higher rates, having a good dividend yield's not as important. But you've seen some broadening here. Healthcare is an area that's very interesting. It's lagged a little bit, but started to do a little better more recently. But technology has been the biggest winner, and I don't see any reason why that would change anytime soon.
An interesting point, too, on dividends, that for some of those high dividend payers, when you have bonds yielding what they are, maybe that doesn't look quite as attractive here. But let's talk about the Fed, because we do have PCE tomorrow. Mike McKee has to work tomorrow, and I guess there's a risk here that the Fed is more hawkish again than has been thought. But we've already seen a lot of cuts get priced out of this market. Do you think that the risk of a more hawkish Fed is already priced in?
I do, but I actually have the opposite concern. I actually think the Fed is being a little too dovish. Because if they were truly hawkish and they looked at this economic data, there would be no cuts this year. And even the Fed is saying they expect to have 3. In fact, not to like stir the pot too much, but I would argue that if the economic growth numbers continue to come in as they are, even with rates where they are, I would argue that the Fed might need to continue to raise rates. Now, I know that's controversial and it's definitely stirring the pot, and I do not think it'll happen, but I would argue that they probably should be thinking more like that than in how many rate cuts they're going to have this year.
Shana, stir away, because I think it's a really interesting point, and it's a question that I've asked, that, okay, you have economic growth holding up. At the same time, of course, you have inflation coming down. Why are we talking about rate cuts? And I know that you think that there's actually a risk that maybe they hike, if we can voice that into the universe, but why do you think the Fed is talking about rate cuts? What explains that real desire to cut rates this year?
I think the Fed and the markets have gotten a little bit drunk on the punch that the Fed has been giving them from the punch bowl for years now. We're so used to this zero interest rate environment that it's just seems absolutely insane that we wouldn't start to cut now that we're, 4.5%, 5%. But if you look back historically, these rates are not high by any stretch of the imagination. It's just, I think the Fed, we're in an election year. I know people like to say the Fed's not political. I don't know. They can be. I think that just generally speaking, the Fed wants to cut rates. They want to do things that are going to have a soft landing. Raising rates is going to increase the likelihood of a recession. And I think the Fed really wants to take a victory lap here.
Yeah, for better or worse, I think that we're going to be having that conversation pretty often the next couple months heading into November, whether or not the Fed is political. But one quick question before we go to break. Probably the most surprising all-time high to me this year so far has been what's been going on in Bitcoin, because that seemed to really be born of that zero interest rate environment. Now, of course, we're back at all-time highs, close to all-time highs for Bitcoin. What's the bull case here? Is it just increasing adoption with these spot Bitcoin ETFs?
That's exactly it. You're able to have a large group of individuals who would never have considered investing in Bitcoin now investing in Bitcoin. And you have two things that kind of make it so that pushes the price up. Number one, the amount of tradable Bitcoin is small. As a percent of the market cap, it's only about 20 to 25% of total Bitcoin trades regularly. So you have to consider that. The second thing is the halving, which happens next month, which is also going to push the price up. And if you look at, IBIT is the most successful ETF launch ever. And then if you look at who's 2 and 3, they are would probably have been the best ETF launch ever, if not for IBIT. So people are clearly adopting these ETFs, makes it easier to own Bitcoin, and people clearly want to. It's a risk-on environment.
Yeah, the net inflows into that group of U.S.-listed spot Bitcoin ETFs has been pretty fascinating to watch. Shana, stay with us. We're going to take a quick look at what's moving underneath the markets right now. We're going to do that. And we are back now with Shana Sissel. She is Banríon Capital Management CEO and founder. And Shana, we were talking very high level before the break, but of course you do invest in individual stocks. And before we get into some names here, I'm wondering what your process looks like. How do you identify specific companies when you're looking to invest in a single name? Because looking at your list, I see tech, I also see energy. It's a real broad mix here.
So I'm going to tell you an answer that you probably have never heard before.
All right.
And a reflection of the background of how I came up in the industry. So my background is that I worked mostly in manager research, meaning that for the last 15 plus years, I research individual strategies, mutual funds, hedge funds, things of that nature. So the way I get my stock ideas is when I sit down and talk to portfolio managers, I hear them tell their stock stories. And so I will look through some of the portfolios of my favorite managers who I have the greatest respect for, and it's find names that seem interesting to me from a story perspective. I'll talk to them and see why they and their analysts tend to like them, and then I'll do my own work based on the feedback I've gotten, and that's how I narrow my list down. Now I do my own work after the fact and try to make sense of the story above and beyond what I've been told, but most of my ideas come from looking at people that I truly respect, portfolios, and what they own.
No, that makes a lot of sense, and I appreciate the clarity there. And it's interesting, this story-led approach, rather than, I talk to a lot of people who, for example, use a screen, they look at valuations first, price to book, et cetera, but it sounds like you really start with the narrative and then go from there.
Yes, I started my career at Fidelity Investments. So I worked with Will Danoff and Peter Lynch, and they are story people. Will always likes to talk about how most of his best ideas come from paying attention to what kids are doing. There are stories about Peter walking through downtown Crossing and walking into stores and asking salespeople what's selling. They were story people. So I grew up in an environment where the folks that I respected most, that's how they approached it. Now, then they go and look at the PEs and that kind of thing, but they don't start screening that way. They look at what the trends are, what they're hearing. They'll sit in on meetings with management from other firms and hear about competitors and start with the story and then look at the fundamentals. And so that's kind of where I come from too.
Well, let's talk about one of the biggest stories out there. That, of course, is AI, and that, of course, is NVIDIA. Of course, NVIDIA has just seen such a fantastic run. We were just talking earlier with Jess. It's up, 80% this year alone? It's only been one single quarter. What is the continued momentum here? Because I have to imagine all of NVIDIA's competitors are really trying very hard to take some of that share.
Well, they don't have a lot of competitors, and that's part of the story, is that there aren't a lot of folks that are doing what they're doing and in being as innovative as they are. The other thing is, once you start using NVIDIA chips, you tend not to move unless there's a reason, right? And since they already have the dominant position, unless NVIDIA does something to screw that up, it's going to be hard for another player to come in and take share. They have more demand than they can keep up with supply-wise. That, again, is a tailwind to the stock. Now, I would argue that that is actually a risk as well, because as I just said, they have to execute perfectly in order to ensure that they don't have somebody in and start to take share because they can't meet demand. But they have done that. And so, those are the reasons I really like the stock. We're only in about the second inning of AI. I've liked the stock for a long time. You want to talk stories. I got excited about NVIDIA back in 2001, 2002, when I started following the stock, when I first got into the industry, because of the gaming chip and the graphics. And I remember watching my brother play video games and being in awe of the quality of the graphics. That is what got me looking at NVIDIA, and that is how I followed the stock ever since. But today, it really is about having that dominant share and executing really, really well.
And I mean, it's a good reminder too, that NVIDIA has been around for decades. This is not a new company just coming out of the gate. So that's the NVIDIA story, and it definitely makes a lot of sense. On the other side, though, sort of the, I don't know if you want to call it one of the spiritual opposites of what we're seeing in AI. You do have an old school energy company. We're talking about Diamondback Energy. We have just about a minute, but what's the story there? Because I feel like some of these energy names have definitely been left behind.
Well, we've seen some changes. There's not as much emphasis on EV. Goldman just came out with a note saying that hybrids, where it's at in terms of cars, we're not seeing that there's less demand for gasoline and other types of fossil fuels. Diamondback Energy has this huge advantage in that they can get and be profitable with oil prices being at $50 around that point, which is better than most of their competitors. So they have very good margins. They're also potential for to be acquired from some of the larger players out there because they have such good margins, and they're able to take advantage of what's going on in the marketplace now, where we're starting to see this reversal of people moving back to the fossil fuel world, understanding that we're not ready to shift away.
All right, Shana, always great to speak with you. Have to leave it there. Our thanks to Shana Sissel, Banríon Capital Management CEO and founder.